In our previous video, we scratched the surface of the stablecoin revolution, a sector with a breathtakingly high ceiling. But there's a catch. Most of the key players are out of reach for the everyday investor. We all dream of catching that once-in-a-generation wave, like buying Bitcoin a decade ago. But when a real opportunity stares you in the face, do you know how to seize it? Do you just leap without looking? It's never that simple. Think back on Bitcoin's wild ride over the last decade. It wasn't just a journey. It was a brutal, stomach-churning roller coaster. We saw breathtaking surges of over 1,000%, followed by soul-crushing crashes that wiped out 80% of its value in the blink of an eye. Even if you saw the future, could you have held on? Could you have stomached the gut-wrenching feeling of watching your investment get decimated overnight time and time again? Let us be honest. How many people truly have the iron will to survive that kind of chaos? This is the hard truth. Spotting a life-changing opportunity is one thing. Surviving it is another. But what if you had a map, okay? A guide to the hidden patterns of these explosive new industries? What if you could anticipate the breakthroughs and the breakdowns? Imagine how much easier it would be to navigate the treacherous early days of a revolution, if you knew the rules of the game. Today, we're going to uncover that map for the stablecoin industry. And because we're not speculators, we won't be looking for clues and charts. We're going to dig deeper. We're going to expose the real story hidden in the fundamentals, the technology, the business models, and the global economic forces at play. Welcome to the Stewardship Finance Academy, the channel dedicated to turning you into a confident, informed investor. What exactly are stablecoins? At their heart, stablecoins are a new breed of digital money, but they break from the crypto pack in one crucial way. Unlike the wild volatility of Bitcoin, stablecoins are engineered for stability, anchored to real-world money like the US dollar with a simple promise. One stablecoin will always equal $1. This promise isn't magic, it's backed by cold, hard assets. Each stablecoin is backed one-on-one by real-world reserves like cash or government bonds, making them the polar opposite of Bitcoin, which has no physical anchor. This foundation is why the world is buzzing. Their potential is staggering, a ceiling that rivals and perhaps even surpasses that of early Bitcoin. So where does all this world-changing power come from? It boils down to one thing. Their revolutionary advantage is a form of currency. They're cheaper and faster than the dollar, with the blockchain's ironclad security. Unlike Bitcoin, which is hoarded like a digital treasure, stablecoins are built to be spent the perfect fuel for commerce. The vision is breathtaking. A currency poised to reinvent global trade, perhaps even dethroning the US dollar. But as investors, we must cut through the hype. For all their potential, the real power of stablecoins is currently locked into one specific arena that holds the key to their future. Forget the distractions of speculative trading. The true revolution, and where the real money will be made, is in dismantling the broken system of cross-border payments. Right now, the global economy is choked by a system built for the last century. SWIFT. It's a clunky, expensive relic. Every time you send money across a border, it gets passed through a chain of middlemen, each one taking a slice. Those fees stack up, costing you anywhere from 1% to a staggering 10% of your money. And the speed, glacial? It can take days for your money to arrive. If you ever had to do it, you know the frustration. It's a system crying out to be replaced. Now, enter stablecoins. Built on the blockchain, they obliterate the middlemen. Payments become direct, peer-to-peer. That costly transfer that took days, with stablecoins it costs pennies, and it's confirmed in seconds. Not just on weekdays, but 24/7, 365 days a year. The system never sleeps. The advantage isn't just big, it's world-changing. And this isn't about wiring a few bucks to a relative. This is about the lifeblood of our planet's economy, global trade. Colossal $200 trillion market completely up for grabs. But here's where it gets truly explosive. Stablecoins won't just take a piece of the pie, they're going to make the entire pie bigger. Picture this. For decades, a coffee farmer in Jamaica or a small garment factory in Southeast Asia has been locked out of the global marketplace. Why? Because sending them a few $100s for an order meant losing nearly 10% to fees. They were cut off, forced to rely on predatory middlemen just to survive. Now with stablecoins, those gates are being smashed open. Suddenly, millions of entrepreneurs can connect directly with buyers anywhere in the world, with costs slashed to almost nothing. This isn't just an upgrade. It's an economic liberation that will unleash a tidal wave of new commerce. They won't just join the global economy. They will expand it, creating a powerful cycle of growth. This is the true disruption. It's not about making things faster. It's about redrawing the map of global trade itself. This is the power that has the world on the edge of its seat, and the numbers are staggering. While the market sits at $250 billion today, projections show it exploding to $2 trillion by 2028 and a mind-blowing $4 trillion by 2030. That is a 70% growth rate year after year. So, with a future this bright, is it time to go all in? Hold on, this is where the hype train derails, and where most investors get left behind. They see the explosive growth of Bitcoin and assume stablecoins are just the next rocket to the moon. This is a fatal mistake, a first hurdle. A crisis of trust. The game here is completely different. Bitcoin is a speculative asset. Its value is driven by a frenzy of buying and selling a fire that's easy to fuel with hype. But a stablecoin is not an asset. It's a tool. Its price is locked at $1. Its power doesn't come from a rising price tag. It comes from mass adoption. Think of it this way. Bitcoin's value is in being owned, a stablecoin's value is in being used. It needs to be woven into the fabric of daily life, adopted by millions of people and businesses, one transaction at a time. That kind of growth can't be faked with market hype. It has to be earned slowly and painstakingly. And that leads us to the billion-dollar question. If this technology is so revolutionary, why isn't it everywhere? After more than a decade, what invisible force is holding it back? The answer to that question is the key. It's the secret that will reveal when this industry will finally ignite, when it might just crash and burn. Before stablecoins can change the world, they have to overcome their first great demon, a deep and pervasive crisis of trust. Right now, the industry is a lawless frontier. It's the Wild West, filled with shadowy companies issuing stablecoins backed by nothing but empty promises. Even the biggest player in the game, Tether, has been caught with its hand in the cookie jar, holding a chunk of its reserves in risky assets instead of solid cash. This isn't just a red flag, it's a 5-alarm fire. You can't be certain your money will be there tomorrow. You have to live in fear that the platform you're reusing could simply vanish, then the technology is worthless. No one will build their future on a foundation of sand. So is there a way out of this chaos? One word. Regulation. This isn't a new story. Bitcoin walked this same fiery path. For years, its decentralized nature made it a breeding ground for scams and catastrophic failures. We all remember the implosion of Three Arrows Capital and the shocking fraud of FTX scars that still haven't healed. But then, the sheriffs arrived. Targeted regulations began to tame the chaos, bringing a sense of order that finally gave Wall Street the confidence to step in. It was only then that Bitcoin stabilized and began its greatest ascent. Regulation didn't kill Bitcoin, it legitimized it. It built trust, and that trust unlocked trillions in value. The exact same logic applies to stablecoins. For this industry to have any hope of a future, it must be brought out of the shadows and into the light. And on that front, we just witnessed a seismic shift. A true landmark moment. The passage of the Genius Act in the United States. After a long and hard-fought battle, this bill is now law. Here's what it does, in 4 crucial strokes. Ironclad backing. It forces every stablecoin to be backed 100% by real, ultra-safe assets, cash, and short-term government bonds. No more smoke and mirrors. Radical transparency. It rips the curtain back, forcing issuers to open their books to public and regulatory scrutiny. The secrets are over. Purely a currency. It bans them from paying interest, ensuring they remain a tool for payment, not a risky investment scheme. A crackdown on crime. It holds issuers to the same high standards as banks, forcing them to fight money laundering and other illegal activities. This law isn't just a new set of rules, it's the bedrock upon which the future of stablecoins will be built. It's the foundation of trust. And this is the real reason the sector has suddenly caught fire. People think it's about Circle's IPO, but they're seeing the smoke and missing the inferno. The act is the true catalyst. Circle is just riding the shockwave. So, with trust finally on the table, is the industry about to launch into the stratosphere? That's what the headlines want you to believe, but I'm telling you, it's not that simple. This first victory is just the beginning of the war. The industry is about to run headfirst into its next great obstacle, and this one will be even harder to overcome. The second hurdle. The triangular deadlock. Trust is essential, but it's not enough. For a currency to conquer the world, it needs to be more than just safe. It has to be effortless. For anyone outside the crypto bubble, it's a nightmare. The process is a maze of confusing tools and technical jargon. One wrong click, one forgotten password, and your money doesn't just get stuck, it vanishes into the digital abyss, gone forever. And even if you navigate this minefield perfectly, you re-still at a dead end if the person you're trying to pay isn't also a crypto expert. But let's say you push through, you master the chaos, and drag your business partners along with you. Does that ignite the revolution? Not a chance. Because the technology itself is a ticking time bomb. At low volumes, the system is a dream cheap and instant, but the moment it starts to succeed, it fails. As more people pile in, the network chokes, transactions grind to a halt, and the dream of instant payments turns into a nightmare of digital traffic jams. It's a paradox. The very success of the technology would be its undoing. This is the killer of all new networks. To survive, you need a network-effective virtuous cycle, where every new user makes the system more valuable for everyone else. But how can you build a network when the technology is a hostile maze and its own success is its greatest enemy? You can't. The revolution stalls before it even begins, and stablecoins are relegated to a niche curiosity for a handful of insiders. Is there a way out, technically? Yes, scaling solutions can patch some of the holes, but the real solution isn't a technical fix. It's about bringing in the titans of the old world. Imagine a world where you could use stablecoins as easily as you use PayPal, Stripe, or your Visa card. That's the dream. It requires the giants of finance, the banks, the payment processors, the credit card companies to build the bridges between the old world and the new. They have the licenses, the trust, and billions of users. They are the only ones who can make stablecoins truly effortless. And if you read the headlines, it looks like they're on board. But don't be fooled. Their announcements are nothing more than corporate theater. They are dipping a toe in the water, but no one is diving in. Why? Because they have a dirty secret. These giants are the gatekeepers of the old, broken system. They are the ones getting rich off those outrageous fees. Stablecoins aren't an opportunity for them. They are an existential threat. For companies like Visa and Mastercard, a third of their revenue comes from the very system stablecoins are designed to destroy. Asking them to lead this revolution is like asking a turkey to organize Christmas dinner, so the old guard won't move. What about a new challenger, like Circle? They have the vision, but they are locked out. They don't have the licenses or the backroom deals needed to operate on a global scale. And the keys to that kingdom are held by the regulators, who are terrified of risk, and would rather hand them to the dinosaurs they know than a disruptor they don't. This has created a fatal standoff, a triangular deadlock. It's the old guard. They hold the power, but have zero incentive to change the system that made them rich. The innovators. They have the will to change the world, but are locked outside the gates. The regulators, they hold the keys, but are too afraid to give them to anyone new, hoping the old guard will do the job they have no intention of doing. It's a perfect trap. The incumbents won't act, the challengers can't. And the regulators are paralyzed. Each one is waiting for the other to move, and so no one does. The result? Complete paralysis. The revolution is dead on arrival, and the current hype is nothing but a ghost of faint echo of what could have been. So, is this the end of the road? Is the dream of stablecoins dead, strangled by the very system it was meant to replace? It's a grim picture, and breaking this stalemate will be monumental. A breakthrough could come from a political earthquake, a powerful visionary leader willing to shatter the old order and force reform, no matter the cost. A single, decisive blow to break the deadlock. But let's be realistic. In the slow-moving world of democratic politics, a move that bold is a long shot. There is another path, a more likely and far more pragmatic one. Cooperation, not conquest. Instead of trying to burn the old system to the ground, stablecoins could integrate with it. The SWIFT network isn't just a piece of technology. It's the central nervous system of global finance, hardwired into every major government and bank on the planet. To think you can simply rip it out and replace it is a fantasy. The only way forward is a grand bargain. Truce. The financial giants would have to sacrifice a piece of their golden goose. The innovators would have to compromise on their purest, decentralized ideals. And the regulators would have to find the courage to embrace calculated risk. Everyone gives a little to gain a lot. It's a painful compromise, but it's the only way to shatter the deadlock. If a breakthrough comes from either direction, the floodgates will open. And the true explosive growth era for stablecoins will finally be unleashed. But if it doesn't, this entire revolution, for all its promise, will fade into obscurity, another ghost in the machine. So, after all this, where does that leave us? How do you play a game that's rigged from the start? First, let's be crystal clear. The new regulation is a game changer. It gives the industry a foundation of trust it has desperately needed, and that will almost certainly ignite a short-term firestorm of interest and investment. But do not be deceived. This is a false dawn. Regulation makes stablecoins safe, but it doesn't make them useful. The triangular deadlock remains, a great wall standing between today's potential and tomorrow's reality. This means the coming surge is built on fragile ground. It's a wave of hype, and if you ride it, you must be ready to jump off before it crashes onto the rocks. But that's the short-term game. If you zoom out, the picture changes. I am an unshakable believer in the long-term destiny of this technology. The march of progress is relentless. It doesn't care about corporate greed or bureaucratic inertia. The problems we've talked about today, the deadlock, the resistance are temporary roadblocks on an unstoppable journey. Eventually, they will be overcome. For a true investor, the destination is not the prize. The prize is understanding the journey. Now that you have the map now, you can see the obstacles and the turning points, you are no longer a passenger. We're a navigator ready to chart a course through one of the most profound investment opportunities of our lifetime. If you're interested in developing the skills needed to invest effectively, I'd like to invite you to join our stock investing masterclass. If you're a subscriber to our YouTube channel, simply follow the link in the description to claim the class for free. Take this opportunity to learn the skill for yourself, so you won't miss out on incredible investment opportunities, including ones like stablecoins. Thank you for watching. Don't forget to like, subscribe, and share this video. See you in the next one.